The trading rule that made Jesse Livermore millions, but most traders ignore it. Have you ever bought a stock, watched it fall a few percent, and told yourself, I'll just wait. It'll come back. If that sounds familiar, you're not alone. In fact, that's exactly what millions of traders do every single day. They hold on to losing positions, hoping the market will eventually prove them right. But Jesse Livermore, one of the greatest traders in history, believed that this single habit destroyed more fortunes than almost anything else. His most important rule was simple: cut your losses quickly. It sounds easy, but in reality, it's one of the hardest things any trader will ever do. Today, we're going to explore why this one rule made Jesse Livermore millions of dollars, why most traders ignore it, and how you can apply it to become a more disciplined investor. Let's begin. Imagine you're driving down a highway. Suddenly, you notice smoke coming from your car's engine. Would you ignore it and keep driving because you hope the smoke disappears? Of course not. You'd pull over immediately before a small problem becomes a disaster. Yet that's exactly what many traders do with losing investments. Instead of accepting a small loss, they convince themselves the market will recover. They wait, they hope, they pray, and often the loss gets bigger and bigger. Jesse Livermore understood something that many people still struggle to accept today. Small losses are part of trading. Big losses are optional. Every professional trader loses money. Yes, even the best. The difference isn't that professionals never lose. The difference is that they refuse to let a small mistake become a catastrophic one. Let's look at a simple example. Suppose you buy a stock for $100. It falls to $95. That's only a 5% loss. You have two choices. The first option is to accept the loss, sell the position, and move on. The second option is to convince yourself it will bounce back. Now imagine the stock falls to 80, then 60, then 50. What started as a small mistake has now become a devastating loss. Here's something many people don't realize. If your investment falls by 10%, you need an 11% gain just to get back to where you started. If it falls by 20%, you need a 25% gain. But if your investment falls by 50%, you now need a 100% gain just to break even. That's the brutal mathematics of investing. The deeper the loss, the harder the recovery. This is exactly why Livermore believed protecting capital was more important than making money. Because if you protect your capital, you'll always have another opportunity. But if you lose most of it, the game becomes much harder. Early in his career, Jesse Livermore made the same mistakes that many beginners make today. He held losing positions. He ignored warning signs. He believed the market would eventually prove him right. Sometimes it did, but many times it didn't. And those painful experiences taught him one of the greatest lessons of his life. The market doesn't care about your opinion. It doesn't know how much you paid for a stock. It doesn't know how confident you feel. The market simply moves according to supply, demand, news, expectations, and human psychology. The sooner Livermore accepted that reality, the more successful he became. He once explained that being wrong wasn't the problem. Staying wrong was. Think about that for a moment. Every trader is wrong. Every investor makes mistakes. The goal isn't to avoid mistakes. The goal is to make sure your mistakes remain small. So why do most people struggle to follow this simple rule? The answer isn't technical, it's psychological. Our brains hate admitting mistakes. Selling at a loss feels like failure. We think that if we just wait a little longer, maybe everything will work out. Hope slowly replaces logic. Emotions replace discipline. Instead of asking, what is the market telling me? People ask, how can I avoid admitting I was wrong? That tiny shift in thinking has destroyed countless trading accounts. Another common mistake is averaging down. Imagine buying a stock at $100. It drops to 90. Instead of accepting the loss, you buy even more. Then it falls to 80. You buy more again. Eventually, you've invested far more money into an idea that's already proving itself wrong. Can averaging down sometimes work? Yes. But Livermore believed it encouraged bad habits. He preferred adding to winning positions rather than increasing exposure to losing ones. His philosophy was simple. If the market agrees with you, increase your position carefully. If the market disagrees with you, step aside. That approach kept him aligned with the market instead of fighting against it. One of the greatest misconceptions about successful traders is that they predict the future. They don't. Successful traders manage risk. That's what Livermore mastered. He understood that no one can know exactly what the market will do tomorrow, but everyone can decide how much they're willing to lose if they're wrong. That decision changes everything. Modern traders can still apply this lesson today. Before entering any trade, decide the maximum amount you're willing to lose. Not after buying, before buying. Once that limit is reached, exit without hesitation. No debating, no hoping, no emotional bargaining. Discipline must be stronger than emotion. Another important lesson is position sizing. Never risk so much money on one trade that losing it would affect your confidence or your future decisions. Professional traders survive because they think long-term. They know there will always be another opportunity. Beginners often believe every trade must be the big one. Livermore never thought that way. He focused on staying in the game. Because if you stay in the game long enough, opportunities always come. Perhaps the greatest lesson Jesse Livermore left behind is this: your first loss is usually your smallest loss. Ignore it, and it often grows. Accept it, and you preserve both your capital and your confidence. That's not weakness. That's professionalism. Remember, the market doesn't reward stubbornness. It rewards discipline. It doesn't reward hope. It rewards preparation. It doesn't reward ego. It rewards patience. Jesse Livermore became one of the greatest traders in history, not because he avoided losses. He became legendary because he respected them. He understood that losses are simply the cost of doing business. And once you accept that truth, you stop fearing losses and start managing them. That single shift in mindset can completely transform the way you approach the markets. So the next time you find yourself holding a losing position, ask yourself one simple question: am I following my plan? Or am I simply hoping? Because hope is not a strategy, discipline is. If you found this lesson valuable, make sure to subscribe for more videos covering Jesse Livermore's timeless trading principles, investing psychology, and the lessons that continue to shape successful traders around the world. Thanks for watching, and I'll see you in the next video.